So those December inflation numbers are about to drop, and they might look a little scary at first glance. But there's a hidden story here, a kind of statistical distortion you really need to know about. Let's dig into what those big headline numbers aren't telling you. So, this whole thing really kicks off with a mystery, a question that had economists totally scratching their heads after the last report came out. How on earth did it look like inflation just vanished in November? And this was the number that got everyone so confused. The core consumer price index rose just 0.16%. That's the one where they strip out the crazy up and down costs of food and gas to get a better sense of the real trend. And it came in so low, it didn't feel real. It didn't match what was actually happening out there. Okay, so here's how we're going to tackle this. First, we'll unpack that November puzzle. Then we'll get into the real culprit, a shutdown distortion. After that, we'll look at why December is expected to have this payback, check out some key exceptions to the rule, and then we'll zoom out and look at the bigger picture. All right, first up, let's dive into that November inflation puzzle. This was the report that really raised some eyebrows. Yeah, to put it simply, the numbers made it look like price growth just slammed on the brakes all of a sudden. It was painting this picture of an economy cooling off way, way faster than any of the other data was telling us. It felt off. Too good to be true, So what's really fascinating here is that the culprit behind these weird numbers wasn't some big economic event. Nope. The real reason was, well, kind of boring but super important. It was a procedural hiccup, a glitch in the system really, and how they collected the data in the first place. And that glitch, it all goes back to the 43-day government shutdown. Because it was the longest one in history, it just threw this giant wrench into how everything normally works. And that included when and how the government was supposed to be collecting its price data for that November report. And you can see the domino effect right here. First, the shutdown happens, so the Bureau of Labor Statistics, the BLS, they get a really late start. That late start pushes their whole data collection window into the second half of November. And what happens in the second half of November? Exactly. Black Friday, holiday sales, all the big discounts. So the final result? A totally skewed reading that made it look like prices were way lower for the whole month than they actually were. Okay, so that brings us to December's expected payback. This is what economists are calling a payback month, where the numbers are probably going to snap back to reality and correct for that weirdness in November. And you can see that correction happening right here in the numbers. Look at the core CPI forecast for December. It's more than double what we saw in November. And check out core goods. That's a huge jump. But remember, this isn't some scary new wave of inflation. It's really just the data catching up with itself. This chart really drives the point home. You see that massive rebound forecasted for goods prices? That's because that's the exact category that got thrown off the most by all those holiday sales that skewed the November data. And here's the bottom line, which Wells Fargo Economics points out really well. This rebound is going to be most obvious in goods prices. Why? Because that's where you see all the holiday discounts. So again, I can't stress this enough. This isn't new inflation. It's just a statistical correction. It's fixing the numbers that were reported way too low back in November. But it's never that simple, is it? The story has a little twist. This isn't just a simple rebound across the board. Okay, so think about one of the biggest drivers of inflation for most of us, shelter. We're talking rent, housing costs, the whole deal. Well, it turns out that because of the specific way they collect that data, the payback for shelter costs from that November blip, it's going to be on a delay. This timeline here shows you exactly why. We got that weirdly soft number in November, right? But don't expect a correction in December. Because of this thing called a 6-month panel rotation, which is just a fancy way of saying how they cycle through the houses they survey, the actual payback for shelter costs won't even show up in the inflation report until April. Yeah, April. And it gets even more complicated because there are other things going in the opposite direction. Health insurance, for example, dropped big time in November, and it's expected to keep going down. Same with car insurance. Prices there are actually expected to decline for the next few months. So you've got some prices snapping back up while others are actually falling. It's a real mixed bag. So, okay, with all this noise, these corrections, delays, something's going up, some going down, how in the world are we supposed to see what's really going on? Well, we have to zoom out. We've got to look past all this monthly static and focus on the bigger picture. And the best way to do that is to ignore the noisy month-to-month changes for a second. The real story, the most important metric, is the year-over-year rate. We need to see where we are now compared to where we were this time last year.
And this is the number you want to keep your eye on, 2.8%. That's the forecast for the year-over-year core CPI. And even with all the chalky monthly numbers, this number tells a much calmer, more stable story about the real trend. And here's why that's so important. Even if we get a kind of high monthly number for December, that overall annual rate, that 2.8%, is still expected to be lower than it was back in September. That means the bigger trend is still pointing down. Inflation is still cooling. So the takeaway here is that the broader trend is still headed in the right direction. Just like the economists at Wells Fargo say, the annual rate should show that, quote, inflation has resumed its descent. The monthly stuff might be a roller coaster, but the year-long journey is still downhill. So when you see those December inflation numbers pop up, remember, there's a whole story behind that headline figure. This isn't really about a new spike in prices. It's about fixing a data blip from a government shutdown. And knowing about these little quirks is absolutely key to understanding what's actually happening in the economy. Which, of course, leaves us with a million-dollar question. Once all this statistical dust settles, is the inflation fight really and truly over? Well, that's a story for another